Hello and welcome to today's issue of Fat Tail Daily. I am joined by my good friend Nick Hubble, who is in Spain still. Is that right, Nick?
That's right. I'm in Barcelona. I was supposed to go to Germany to visit my mum, but that didn't play out.
Yep.
So yeah, I'm still in Spain, still in Barcelona.
Right, and it's 10 p.m. at night, so you haven't even had dinner yet. When Callum was there, he'd be eating at midnight, and that would be when his afternoon tea was.
It does feel like it. We've got young kids. I guess Callum does too. I don't know how he managed, but
Yeah, I think
I'm
they've
with
just got completely messed up time zone
yeah.
wise.
Maybe they just never had to adjust. But
Yeah,
I'm with the Japanese in-laws, so things are a bit different. But yeah, it's still a shock that the kids go to sleep at about 7 in Australia,
yeah,
7:30, and here it's about 9.
yeah, yeah,
So
yeah.
yeah.
But you've been talking to you've been doing you are a resident free marketeer, I'd say. We're all free market people, I guess, but you particularly so. I think you toured, didn't you, with a free market? What was the outfit called?
Roadshow. Yeah.
The Roadshow. But you've spent was it today or yesterday talking to your five of your friends, and that's what your piece is based on, really. And I guess the discussion was focused on Argentina. It turned out that one of the people that you're talking to knew the new president over. Oh, is he new? When did he get elected? A couple of years ago? 2 years ago?
Yeah,
1 year ago?
I think it's still months ago. I think it's early this year. But it's
Yeah.
actually, I met one friend, and he's the fifth friend or contact through our work. Some of whom you know actually. All five of them know Javier Milei personally,
Right.
um, and so that was quite interesting to see what the five of them have said over time.
Well, they all seem to say, as you state, that he is the real deal. So I was going to ask, and this is what your sort of piece is about today. How do you think his radical approach to cutting government spending might actually influence policy discussions in other countries, particularly the West? And the point that you make is that a lot of countries in the West actually need someone like that to come in and cut everything.
Yeah, the big news right now is in the UK that with the budget, they've hiked taxes a lot, but the bond market reacted negatively, so the
Yeah.
bond yields went up. So it feels like a lot of Western countries, with notable exceptions including Australia, are starting to hit a wall in terms of how much they can borrow. I think there's many reasons for that. One of which I think the most important one is demographics, but all these countries are starting to realize that they can't continue to go on as they have been. And the projections for their spending are completely horrendous and outrageous. And we're at the point where hiking taxes no longer fixes these problems, basically because taxes are too high, as we've talked about in previous videos. So if you can't hike taxes to fix this problem, you've got to cut spending. That's all you can do. And there's nobody doing that around the world, apart from all of a sudden this guy in Argentina, who's literally got his chainsaw out. He's cutting departments and cutting spending heavily. And I think there's this weird situation for Australia where our debt to GDP ratio is not that high. So we're not at risk of hitting the wall like the US and like parts of Europe, especially Japan. So we can see these two different paths that Australia can take, right? We can continue to go on as we are now and become like Europe and the US and Japan over time. Or we now have this sort of shining example of what the alternative is. And for the longest time, everyone said, there's no government, no politician that can cut spending. It's just never going to happen. At best, they might fiddle with the rate of increase of spending in 10 years' time or something stupid like that. But we've now got our example. So it reminds me of the whole Thatcher and Reagan story. That being a very deeply flawed story when it actually came out in practice. But nevertheless, the symbolism and the ideology and the setting an example, at least in terms of what they were saying, did have an important impact. So it feels to me that we're again at that same turning point, and that Australia is quite unique in the fact that we're very well developed, very politically stable country, that we might be able to avoid the fate of places like Europe and the US. Given that we now have this example of what happens if we cut spending and behave financially responsible ways, coming out of Argentina of all places.
Well, let's come back to that in a sec, because you do draw an interesting parallel between the different approaches to funding government spending through inflation. That was Argentina in the old days when they used to just print money, high taxes, particularly in Europe, or just simply just borrowing money. But How do you see these different strategies playing out over the years ahead, particularly given the demographic challenges that you mentioned?
Yeah, well, if you look at the spending forecasts and projections, they're basically parabolic increases in spending, and tax revenue as a share of the economy kind of stays flat, which means there's this parabolic increase in deficits coming. And I think that's optimistic because demographics are actually worsening at a much faster rate than those fiscal projections are assuming. I read a great article in the Financial Times recently about how the UN regularly underestimates birth rates by like a third in some countries. So a third less children are born than what was anticipated. The UN every year that they publish their forecast for birth rates publish a sort of an L shape. So it's going to the birth rate's going to go down, but then go sideways. It's going to stabilize. And in some countries, they forecast that it's going to improve. But the opposite happens. It just keeps on falling and falling and falling and falling. So we're now at the point where it's only a matter of time before there's some sort of financial crisis at the government level, if it hasn't happened already in places like the UK. And so, theoretically, financial markets should therefore anticipate the fact that it's going to be one and start having one now. And my key point, based on what's happened in the UK actually in the last few days, is that if hiking taxes doesn't solve the problem because taxes are already too high, then cutting that spending is anything left. So that's the one thing that we can all look forward to. There's a great quote I found today from Milton Friedman about, I should have had it ready for this, Woody. He basically says you should focus on one thing.
You don't know all his quotes off by heart?
No, I should. This is especially a good one. You should look at one thing and one thing only, and that's government spending. Because in the end, all spending must be financed either through taxes or inflation. So it doesn't really matter whether you focus on tax or inflation because government spending is the driver of the two. And that's the end of the quote as I remember it. So if you focus on inflation, complain about inflation, then taxes are going to go up. And if you focus on taxes, then you're just going to get inflation. So Argentina went the inflation route, like you said earlier. Europe went the tax route. But it doesn't really matter between the two. Spending is the only thing that does matter. And we're at the point where government spending is going to spiral out of control. And that's precisely what Javier Milei has gone after in Argentina. That's what the chainsaw made him so extraordinary, was that he's going to cut spending. He was going to flatten entire government departments. So he's the first one who is actually credibly going to try that. And that's why we mentioned at the introduction to this video that he's credible, that he is the real deal, that he is going to actually try and do this. And if it works, which I think it will if he continues to pursue it, but that's an ideological claim. If it works, all of a sudden, all these other countries that are watching what's going on in places like the UK with the budget yesterday, what's going to happen in the US over the coming years, what's going to happen in Japan over the coming years with the value of the yen, all these other countries that are seeing that are going to say, well, we can continue on our path as we have been and become like them, or we can try what Javier Milei is doing in Argentina. And because Australia is not in as much debt as everyone else in the Western developed world, that path of cutting spending to sustainable levels is less painful, right? Because we don't have this legacy of debt and interest to deal with as well. So it really feels like Australia is going to be the lucky country.
I was going to say, actually, that was going to be my next question, because you present a more optimistic view of Australia's position, suggesting that it might learn from others' mistakes before making those similar mistakes or issues. But I was going to say, actually, so there's the debt's not as high, but is that the only factor that makes Australia in a better position to avoid the kind of the fiscal problems that are facing Europe and the US right now?
No, so Australia's immigration system is a lot better. I'm sure, well, probably if you're interested in immigration, you'd agree with that. You might still think Australia's not very good, but the immigration system is good, at least at filtering out and bringing in the sorts of people we want. So I think there's a huge advantage there, and I think Australia can sustain that. And that will adjust some of the demographic pressure, and it always has. It's how we've avoided recessions for so long. The worry is, especially for investors, who we're really focusing on here, that the Australian dollar basically skyrockets over the next 20 to 30 years because Australia is the outlier in terms of having that financial and economic stability and political stability as well. And that basically undermines people's investments in all sorts of different ways. So if you're an Australian investor investing in other countries and the Australian dollar goes up, that's a loss to you. A lot of Australian companies would struggle under a soaring Australian dollar. So I think it's a double-edged sword here. What I'm saying is that Australia is going to be more politically and economically and financially stable, but that might not necessarily be good news for the typical Australian investor.
You conclude, though, by suggesting that gold and cryptocurrencies are ways to opt out of potential fiscal chaos. But can you elaborate on why you see these as particularly effective hedges against the type of government spending problems that you've outlined? And is there any other takeaways that you can offer?
Yeah, just because Australia can sit out this instability globally doesn't mean asset prices, even inside Australia, will. So just as, subprime crisis in the US can cause the ASX to crash, and so on and so forth. So I think things are going to get so bad in places like Europe and the US longer term, in terms of either the inflation that governments resort to or this massive spending cuts that are required, that this is going to undermine financial markets very badly. And so the investments that will perform well are the ones that allow people to opt out of those financial markets, which obviously are gold and cryptocurrencies. That's the whole purpose, is that the anti-financial system, or the opt-out from the financial system. So just because Australia is going to do well doesn't mean the Australians shouldn't be owning those assets. That they should perform extremely well as investors from all around the world. Stop trusting their own governments. Stop relying on their own governments, stop investing in things that their own governments are encouraging them to invest in, and they look for the alternatives that, obviously gold and cryptocurrencies are where they will go. It's also quite likely that capital controls will become a large feature of financial markets in coming years. So governments will try to control how much money people can move around. This was a big thing in Argentina, of course, one place where Bitcoin and cryptocurrencies were a big deal very early on because of those capital controls. I think that's coming back, so that governments can try and deal with these huge debts, either by forcing people to lend to the government or by having large amounts of inflation that people can't escape from. And gold and cryptocurrencies are two of the very few ways to escape. Another angle on this is usually, historically speaking, one or a few countries would go through these sorts of crises. So it was the pigs in 2012. It was the Nordics in the 90s and the Asian financial crisis in the 90s. It was the UK in the 70s. It was Italy in the 90s. It's usually a particular region of the world or a particular list of countries that are going through the crisis. So all people in those countries had to do was invest in something outside, usually in the US, as a safe haven. But what's happening this time around is it's almost the norm for a country to be in this much of a pickle. Japan, the US, Europe, all the key financial centers, all the key economies of the developed world are in these sorts of trouble with their debt and their government spending projections, and the fact that's only going to get worse. So this time, it's not going to be easy to flee to another country with your capital, at least not in the Western developed world, leaving Bitcoin and gold as the obvious go-to options, or moving to, I guess, a developing country that might be a bit more stable, but that comes with a lot of political risk.
Yeah. I just got a final question really on demographics. Would you say that's the one most important thing longer term when it comes to the markets, and because you don't really hear many people really delving into that? And I remember we did a report with you, God, it must have been 2013, maybe 2012, and we called it actually the big flip. It was like when the demographic trend tips over, that has diacon. I mean, yeah, when you think of it like that, I mean, it's like when you're looking at a business, right? If the new customers stop, there's only so long a business can keep going with the current customer. And that's true with Bunnings. It's true with like a fast food store, and it's probably true with demographics too, isn't it?
Yeah, there's a few people who say, demographics are going to get bad, therefore, the likes of Bunnings or whatever it might be will get less customers. This is going to be a big issue. I take it one step further than that in that big flip report. So I apply the supply and demand of demographics to stocks directly.
Yeah.
So people buy stocks as investors around about when they're paying off their mortgage. They're middle-aged, late middle-aged. They invest heavily in stocks. and they sell them in retirement to fund their retirement, obviously. So you know how big the two cohorts are because demographics are predictable decades in advance. You know how many people are buying shares, you know how many people are selling shares. And what's happening around the world right now is that the relationship between the two is changing. So more and more people are selling shares because more and more people are retiring, the baby boomers. And relative to that amount, less and less people are buying shares because there's less people of that age. It's
And they
especially
have less
simple to
disposable
understand.
too to buy them.
Yeah. It's very easy to understand in Australia because we've got the superannuation system where
Yeah.
everybody's automatically buying shares. So the number of buyers relative to sellers is declining very rapidly now, all around the world. And there's been some academic studies going back that identify this demographic shift with how stock markets perform. But the underlying claim is that the only reason we had a big stock market boom in the 90s was because baby boomers were buying them. That's when everyone rushed in to buy stocks in preparation for retirement. That's now shifting. There's not enough young people. So there's literally not going to be enough people showing up to buy the stocks that retirees plan to sell, which means prices are going to crash. And if you think about it, the only justification for young people to invest in the stock market en masse as a group is that stocks inherently go up. But what if that was only true because of the shape of the demographic pyramid, the fact that there were few people selling and many people buying? Well, now those demographic pyramids have pretty much become like a Jenga tower. So the number of sellers relative to the number of buyers is out of whack. And it's very simple to understand this. If the government couldn't guarantee you a prosperous retirement on the state pension because there's not enough taxpayers, then there's also, by definition, not enough investors who are in the financial markets to buy all the assets the retirees are going to sell. This is obvious in the social security system that's going to go bust in about 8 or 9 years in the US. It's obvious in like the German healthcare for aged care fund. I can't remember what it's called now. Some bizarre German word, but it's like a nursing fund or something, a health nursing fund. That's going to go bust in, I think they said February next year. The same number game is playing out inside financial markets because demographics, and those demographics are getting worse far more rapidly than the projections had assumed. So I don't think this is priced in yet. The problem is I don't know what to do about it. I don't know how to invest on the back of it because it sort of undermines capital gains as just a general thing.
It's a fascinating idea, though. We'll leave it there, Nick. I don't want to end on too much of a depressing note before the weekend. But people at home, let us know what you think. Is this an idea you'd like us to delve in further? Let me know. You can do that, by the way, to letters@fattail.com.au. Shoot me an email. I answer that inbox personally. So, yeah, it'd be great to hear what you think. And Nick, thank you for your time. If you'd like to read Nick's article on today, just go to the link in the description below. Thanks, Nick. I'll let you go to sleep now.
Yeah, pleasure with you.